Hello guys, it's Max here from Daily Market Movements and welcome to our midweek overlook of the markets. We're going to be covering the likes of gold, Nasdaq, S&P 500, crude oil and the euro US dollar. But just before I get into today's video, just want to quickly explain about our signal service. If you would like to receive daily signals from myself and the rest of the team here at Daily Market Movements, and you can come over to our website www.dailymarketmovements.com. That will land you on this page here, and you just have to simply click buy now, and we charge £249 for a 1-year membership. But to the markets now. So let's kick it off with the gold markets. In front of us is the gold over the US dollar, and today we're trading in the red. We did go and briefly touch and test a 200-day EMA, which is this blue line on your screens. For those who are new to our YouTube channel, I just want to make it clear that I am very bearish on gold. I know that the majority of traders at this moment in time are actually bullish, thinking it's going to go back up towards 2,000. I am bearish. I think that we're going to break down towards 1680, which is this green box here. And then eventually, once we break down below there, we go down to test the 15,000 level, where we found some significant levels of support. Because once we break this supportive level here, where we've bounced on several previous occasions, the next real supportive area is this massive bounce here, where we also witnessed some noise there back in October 2019. So I'm very bearish here. We're just waiting for a catalyst to trigger this downward movement. It could be the Fed. You never know. It could be the taxes, something to do with the taxes. It could be something to do with the US and China. You never know. But I am very bearish here, medium to long term, technical wise. I think that we will trade down towards 1680. And when we do get to that green box, I'm going to come onto YouTube and of course say I told you so. But even if we did break above the 50 and the 200-day EMA, this 1830 area has been offering a significant amount of resistance, and we've previously tried to break above it on 3 separate occasions, as you can see, and we've been rejected every time. So it's clear to me that there is a significant amount of resistance up at 1830, and even if we clear 1830, we only go as high as 1900, which is 70 points higher, where again we're met with a significant amount of resistance in this market. I think that crypto really has taken a shine off gold. Gold really had a fantastic opportunity to trade a lot higher this year, and it kind of turned around, and that's because of the significant amount of money that's been invested into the crypto markets. I think the crypto market, the total market cap for the crypto markets right now, so that's every coin out there, is just over $2 trillion. So that $2 trillion, not all of it, but a majority of it could have been invested into gold, and the current market cap of gold is $12 trillion. So you kind of understand where I'm getting at here, that we could have seen the market cap for gold and the gold price shoot a lot higher if it wasn't for the crypto markets. But I think it's healthy. I like the crypto markets myself. I have money invested in it. I don't have any money invested in gold at this moment in time. I'm not short selling gold. I don't like trading gold. I think that we will break down towards 1680 though. That's my overall bias. Now, if we move into the Nasdaq100, Nasdaq100 has bounced rather nicely during today's trading session, which was a much needed bounce. But that doesn't really change the overall picture. I still think that we could be aiming towards a 50-day EMA. I hope that we go towards a 50-day EMA because it will offer a fantastic buying opportunity. September is typically the worst month of the year for the stock market, and that is evident here when you see the performance so far. First 2 weeks, we've just been trading in the red here for the Nasdaq100. We're off all-time highs, but this is healthy. I think we've shot up way too much in the short term, and little pullbacks like this are healthy and offers fantastic buying opportunity. So personally, I would like to see a move further down towards a 50-day EMA. I would be more than happy to purchase the Nasdaq100 at the 50-day EMA and target back towards that 15,700 area, which is the current all-time high here for the Nasdaq100. I really do like a lot of the tech stocks out there, and even with this little dip, there has become some fantastic value opportunities out there. The likes of AMD, CrowdStrike, Nvidia's off its all-time highs. There's some fantastic mega cap stocks out there in the tech space, which do offer fantastic prices, and I think that there's plenty of money making opportunities, and it's only a matter of time until the Nasdaq100, and that's whether we do go to the 50-day EMA or not, breaks above this previous all-time high, especially as we go into Christmas, which is historically a very bullish time of the year for the stock market. So going into the S&P 500 now, very similar to the Nasdaq 100, but the only difference is that we pretty much come into contact with that 50-day EMA. I've mentioned on my video on Monday when we were, as we were going into the week, that I would like to see a further move towards a 50-day EMA, and that's pretty much what we've got. The 50-day EMA has offered support to this market on several previous occasions. I could keep circling them, but I think I'll be here forever. It's just been so robust since the massive sell-off and the lows that we booked in back in March 2020. That was when the pandemic was really getting to grips with the globe, and since then we've really struggled to break below it. And if we have broken below it, a day or two later we've broken back above it. So they've actually been false breakouts. So I was a buyer here. I did send a signal up to my signal team. We're now making a fantastic amount of money, and I'm targeting up towards the all-time highs, 4,500. I didn't buy the Nasdaq 100 because it didn't quite get to the 50-day EMA. The S&P 500 didn't either, but that's close enough for me. I was more than happy to invest money here, and today we've had that bounce that I was looking for, and hopefully it will continue and go back up towards the all-time high, which I do anticipate it to do so, especially once we come out of the month of September. Next up is the crude oil markets. Now, crude oil markets has really taken off here, and this is something I had forecast going into this week. We broke above the 50-day EMA. I said that I was very bullish for the crude oil markets, and $75 was my first target. That's where we we've seen some previous resistance here, and it looks to be that we are on our way to go and test that that $75 level. And then once we break above 75, I think we go back up towards the all-time highs, which is around that $76 to $77 area. I mentioned on Monday that many analysts out there, Wall Street giants, have put an $80 price target on crude oil going into the end of the year. There's only a few months left of 2021. Crude oil markets really surging towards the upside during today's trading session. Also, we had the inventory numbers come in. I think it was minus 6 million barrels versus minus 3 million expected. So that just shows you that the demand for crude oil is still very strong. So I am bullish here. I think that we still have a little bit further to run up towards $75. But at $75, I would be looking to cash in some profit, just take some money off the table. And if it does go towards 80, fantastic. You will still profit from that. But the majority of your money will be taken off the table just in case we do get to 75 and pull back towards a 50-day EMA down at $69 a barrel. And last but not least, we have the Euro US dollar. Euro US dollar, I'm bullish. Very choppy trading in the past 3 trading sessions. I did advise you guys to buy this hammer candlestick on the daily, and the next day we did shoot up, but we've shot back down during today's trading session. We're pretty much where we were on Monday, and I still remain bullish. I think that eventually we do clear the 50 and the 200-day EMA. We break above, these swing highs here. It's evident that we have struggled on 2 previous occasions to break above this level here. You could even draw a trend line. So if I just get a trend line, you can argue that we are trading in kind of like a downtrend here. But once we do clear this trend line, I'm very confident that will send us on our way back up towards 1.20 and then eventually 1.22. But medium to long term, I do prefer the euro over the US dollar. In fact, I think that the US dollar has still got a long way lower. That's why I'm so bullish on the crypto market, as I mentioned at the start of this video when I was analyzing gold, and that's because I really am bearish on the US dollar. And typically speaking, when the US dollar declines, crypto markets do rally, and then of course it's the vice versa. When the dollar rallies, it's the crypto markets that pull back. But I still think that the US dollar has some more downside to go. So I'm bullish here for the euro US dollar. Thank you very much for watching my video today, guys. I will do a follow-up video for the week on Friday or over the weekend. Just a quick one that if you do want to get our daily outlooks and our daily signals for these markets, then just head over to our website, as I mentioned at the start of today's video, and you can then purchase our signal package for a very small fee of £249 for a year's membership. Thank you guys for watching, and I hope you're all having a lovely day.